First, friends, I want to thank you for your support, whether you're a book purchaser and or a Patreon supporter. Thank you so much for helping us out, helping defray some of the expenses we have garnered, providing you with our service over all these years. And we are happy to bring you this quarterly chart review. Probably one of the best things we do for helping people learn about long-term investing is this quarterly review of the S&P 500. You might say, why the S&P 500? Why not gold? Why not 20-year bonds? It's because all time frames don't work for all things, for all ETFs. Some do, some don't. Encourage you all the time to check out other time frames. Those of you who've been with us for a while know that for 2 years, gold on the 4-hour chart was a total trading chart. What does that mean? It means that you could trade on that 4-hour chart and 9 times out of 10 do great in your practice trades on gold. It just worked. And then it stopped working. Stopped working, I guess, early 2018. It just stopped and has come back sort of herky-jerky, but nothing like it was. What we have found is that this S&P 500 quarterly chart, which is what we have called up here, is magical. It is amazing. It has, going all the way back to the 90s, to the mid-90s, when the Price Percent Oscillator crossed over the red signal line going up or going down, it always triggered a time to either get in or get out of the market on a practice trade, a long-term practice trade. It just would have worked again and again and again. And it's amazing. And in fact, you've heard me review it many times on the show, particularly getting you all to tune in and remind you that we had this special training going out. We can go all the way back to 2000. In mid-year when things crossed over going down. And it just, again, would have gotten you out of the precipitous drop that occurred from 2000 through 2003. Actually, the beginning of 2003 would have gotten you back in when things got safe. You'd have missed a little bit of the up move. But again, things were dangerous around that time period, but would have gotten you in around the end of the year, end of 2004, beginning of 2005, for an incredible run-up, and then would have gotten you out before, as things started to move down and crash in 2008, would have gotten you out of that precipitous drop, and then would have gotten you back into the market in 2011, about that end of that first quarter 2011 for the amazing run-up we had. Now we've talked, this is where things got weird, and this is what I don't understand about the market. It looked like the market was peaking and moving over and getting ready to crash. How many of you remember this? Around 2016, I call this the Trump effect. We had, for the first time, things cross over going down and then crossed back over going up about the time that Trump started making real moves to get into the presidency, and things turned around and actually started going up month after month after month after month, all the way from about mid-2017 through the elections, through 2018, and well, through the 2016 elections, all the way up through 2017 into 2018. But here's what I want to show you that we're seeing, and this is a classic sign, but for one thing, of the market petering out and getting ready for some steep declines. Now, if we look back in the past, and again, remember we study the past so we can help figure out what the future is holding for us. We had in down moves, they were always preceded by the derivative oscillator crossing into the red, either before or right at. This is what we like the best, is when the price percent oscillator and derivative oscillator cross over at the same time. However, we have not had that occur. We do have, and we are calling for you a crossover going down on the quarterly chart. It has closed with a crossover going down on the price percent oscillator, our main indicator. So it is in a confirmed down move at this point, which means if you are practicing long-term trades, you are to pull those long-term trades and either look to get into a short position or just be out of the market as it trundles down over the next many, many months or years. Now, the one thing that we're concerned about is that the derivative oscillator has not gone red yet. That may happen quickly in this next quarter, which would be nice to see. But we do have a confirmed crossover going down. So does that mean on January 1 you pull your long-term practice trade on the S&P? You go short potentially on that? No, it doesn't necessarily mean that. Why? Because when we have the crossover occur, the next thing we do is we go to our next chart. That would be the weekly. And of course, the weekly has so far for the week, it's still in a confirmed down move at this point, but it has moved up a little bit. And we want to see just what's going on there. Is there a reprieve after 3 weeks of strong down movement? In fact, more than that. We had the weekly vertical crossover going down all the way back on the 12th of October. So are things portending a bit of a pullback, and will things go up? That's possible. And again, as we look at the 2-day chart, of course, it might turn around and start crossing up. So what do? You can wait and see how this pans out on the 2-day chart, and if indeed, and on the weekly, and if indeed there's a pullback underway, things are going to, a reverse, I should say, underway. Things are flattening out and going to go up for a little while, or is the new year going to start with continued down moves? We again, are sort of waiting to see how that pans out. You can, of course, the minute that candle closes, you can go right into the market and put yourself in a short position or pull your practice trade at this time and see how that works out. Note that down in your training logs and just see how things continue to go. Or you can give yourself a little bit of time, digest what's going on. And again, the only caveat we're giving you is we just don't have the derivative oscillator going negative yet. It has lost a lot of energy after being flat for many quarters, sliding sideways. And then, of course, it did drop, but it hasn't gone negative yet, and we shall wait and see how that pans out. But again, it is a solid red candle that we have there. It is, of course, a spinning top, almost a doji, means lots of indecision, tending down, but we do have that price percent oscillator crossing over, going down. And that typically portends strong down movement for many, many months or years even. So looks like things have weakened significantly over the course of this last quarter, because the prior quarter was a nice up candle. We had a little bit of shakiness there for the June candle. That would have been the second quarter ending. But of course, things then rebounded, but have fallen considerably short with a lot of losses in the market. So we'll continue to watch things. I do encourage you to follow this quarterly chart. It has truly been something that has been amazing, that would have kept you from being in the market when heavy losses were being sustained over the last many, many years. In fact, we don't go back any further than the mid-90s. It would be nice if our derivative oscillator and price percent oscillator went back even further so we could track it even more, but it has been highly accurate. And the only bump we've seen in the road is the bizarre Trump effect, as I call it, but I do think Trump had a lot to do with those losses not being sustained in the market, and somehow the market knew. It is amazing what the market knows, how it digests all of that information. That's where we are, folks. You have questions, problems, concerns. Of course, we're happy to hear from you. Write us cw@chartingwealth.com. Thank you so much for your support, your generosity for the work we do here. Hope this has been helpful. We will continue to be with you every single day for the daily reviews, once a week for the weekly review and forecast, and of course, once a quarter for this quarterly review. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.